Hello everyone, welcome to today's session on the UK FinTech Market. My name's Tom Bull and I'm the UK Sector Leader for FinTech at EY. During this session, we'll hear from Clare Joy, Head of International Expansion at Onfido, and Samir Gulati, FinTech Specialist at Department for International Trade. Mumbai FinTech Hub is an initiative by the government of Maharashtra for implementing the Maharashtra state FinTech policy. The government of Maharashtra is the first state in India to create a FinTech policy to support the sector with a vision to convert Mumbai into a global FinTech hub. EY is managing MFH's Global Market Access Programme, as part of which EY is supporting MFH in the facilitation of bilateral flow of FinTechs and exploring collaboration with other global FinTech hubs and leading FinTech ecosystem players, amongst other activities. I'll start by making a few brief comments on why I'm so excited about the UK FinTech sector. We've monitored and studied the sector closely since we set up our FinTech practice in 2015. And through our work on the FinTech census and our Global FinTech Adoption Index, through these studies, we've identified the impressive growth of clients within the sector. And of course, we've seen that directly from our work as a service provider to FinTechs in the UK. We've seen innovative new propositions to fulfill unmet needs, and indeed rapid adoption by customers. According to our latest adoption study, we saw consumer adoption of FinTech at 71% in the UK. Over recent years, policy and regulation have focused on supporting innovation and competitiveness, as well as on financial safety and soundness. And I believe the result is that we're building a diverse and resilient ecosystem, which supports customers with payments, financing, and investment needs. Open banking is a particularly interesting area of policy. It aims to put control over the data that banks hold on customers firmly in those customers' hands, as well as opening up the ability to trigger payments from the customer's preferred venue, not just within the banking app. And with its focus on standardization, experience, operational performance, and cybersecurity, I think the UK has created a really unique foundation for collaboration and innovation. And about 2.5 million people have now had the benefit of using open banking. I would say as well, in the UK, we're now at the late stages of a major strategic review of the sector led by Ron Khalifa, the founder of WorldPay, due to be published in February. We're awaiting the final details on what Ron suggests, but based on early previews, we feel like there's going to be a lot of further positive changes to support the development of the sector in 2021 and beyond. I think that's enough from me. I'd love to hear what Clare and Samir think, so let's turn to hear their views. Clare Joy is Head of International Expansion at Onfido, and prior to Onfido, she gained experience at Landbay, another UK FinTech, and in the consulting sector. And Samir Gulati is FinTech Specialist at Department for International Trade, where he focuses on supporting FinTechs, promoting trade, particularly across India and Africa. And amongst other areas, he has prior experience as Head of Policy and Regulation at Innovate Finance. I'd love to start with you, if that's okay, Samir. And I wonder if you could start by helping us to understand a bit more about the UK FinTech opportunity and what really makes it attractive. And if you could shed a bit of light on the UK's kind of overall investment environment and that's conduciveness to building FinTech as well, that'd be really brilliant. Over to you, Samir.
Thanks very much, Tom, and welcome to everyone that's joined today. Good afternoon. So as Tom mentioned, I'm Samir Gulati. I'm one of the FinTech specialists here at the UK Department for International Trade. So straight to your question, Tom, understanding the UK FinTech opportunity and what makes it attractive. Typically, we tend to focus on 4 areas to measure the worth of a FinTech hub. That's sort of access to talent, regulatory and policy leadership, demand, and then capital. So I'll cover those 4 areas. I think to begin with, when you look at the UK, what makes it so attractive is its sheer access to talented and skilled individuals. So, for example, in FinTech alone, the latest stats suggest that 76,500 people work across FinTech in approximately 1,600 firms, although that figure often chops and changes depending on sort of which publication you look at. Generally speaking, you've got 1.1 million people employed in financial and related professional services, 2/3 of which are outside of London. So this isn't just a London-based phenomenon, it's something that reaches across the UK. And then when you look at digital tech jobs, 2.1 million people work in that particular field, according to TechNation across the UK. So, in terms of access to talent, there's certainly the breadth of talent across the UK, which makes it such an attractive destination for FinTech. Secondly, moving on to sort of regulatory and policy leadership, as you've mentioned already, Tom, we have the Independent FinTech Strategic Review chaired by Ron Khalifa, which is looking to report early this year. And again, that's looking to identify priority areas for industry and policymakers to support the ongoing success of the UK FinTech sector. Moving forward, the FCA is often always seen as a real sort of key player in the stakeholder list of players in the UK that have really pushed innovation across financial services and fintech. So, for example, you've got FCA Innovation and the Regulatory Sandbox, which I'm sure many of our listeners today will be aware of. Applications for the 7th cohort shut on December 31st, but across the FCA Innovation's various functions, which also include direct support and the advice unit, over 500 firms have been supported or provided guidance by the FCA. That's also led to the pilot development of the FCA's digital sandbox, which received 94 applications. 30 firms are now in the pilot, and that's very much focused on some of the challenges of today around COVID-19. So again, what that digital sandbox tries to do is provide access to synthetic data, an API marketplace, a development environment to test solutions, and also a support platform to get advice from stakeholders, including industry, academia, venture capital, and government. Looking at the FCA again, on the international side, you've got the Global Financial Innovation Network. That's also chaired by the FCA, but it will be a sort of rolling chair. And effectively, it's a proxy for the FCA's work internationally to set up a global sandbox. Again, that was formally launched in January of 2019. Now more than 60 organizations, primarily regulators, involved. And again, it tries to facilitate collaboration and sharing of experiences and trends on emerging areas of financial innovation. And again, in an extension to the remit of the regulatory sandbox, the GFIN also invited applications. Again, the deadline was 31st of December for cross-border testing of solutions across more than one country at a time. So again, 23 regulators across 5 continents are involved in phase 1 of that work. So again, I think generally speaking, on the regulatory and policy making side, that's where the UK really sings. Generally speaking, we're considered, a forward-looking environment and jurisdiction when it comes to innovation, but innovation teamed up with responsibility as well. To the final couple areas which make the UK a particularly strong market is demand. Again, I won't labor the point here, but London, for example, has the densest concentration of financial and professional service firms, in comparison to anywhere else in the world. So if you're looking to sell your solutions, scale them, you certainly have the incumbents, the banks, the asset managers, the insurance firms, the pension funds, etc., to buy your solutions, which is, of course, a huge bonus when you're looking to exit your business. And then finally, to your point, Tom, on capital and what does that look like with respect to fintech, we're looking at 2019, $4.9 billion was invested in UK fintech across 359 deals. So that's second to the US globally. Looking to last year, despite the headwinds presented by COVID-19, H1 of 2020 saw $1.84 billion invested in UK fintech, with 4 significant deals around the $100 million mark when you look at sort of fundraising rounds. That was Revolut at 500 million, Checkout.com 150 million, Starling Bank at 78 million, and of course, Clare from Onfido will attest to Onfido's success with a 100 million fundraising round as well. And then finally, if you sort of break down types of funding, in 2019, later stage deals dominated the story. Later stage VC and growth capital represented 73% of all investment, up from 71% in 2018. And geographically, 50% of investment in UK fintech comes from overseas, with the US and North America accounting for about 25%. So hopefully that provides a sort of a decent overview and context to the UK fintech sector and why it's such an attractive place to set up your company.
That's brilliant, really helpful context. Thanks, Samir. But before we move to Clare, just love to push you a little bit more on the sort of more practical aspects of setting up in the UK. How easy is it to expand into, set up an office in the UK? And what are some of the kind of typical organizational setup processes you have to go through?
Sure. Yeah. At a high level, it's relatively easy. It's a matter of weeks to set up your organisation, your fintech in the UK. DIT, Department for International Trade, has a dedicated service called the Investment Services Team, which can guide you through that process to set up an office here as well. I'd say sort of some of the main things to consider for a firm when they're looking to practically set up here is your incorporation. Obviously, that's key within any country, and here it's with Companies House. It's the location of your offices. Where do you actually want an office? Do you want a standalone office? Do you want to work within a co-working space? Do you want to work within the likes of a level 39, for example, which is more of again, it's a co-working space, but more of an accelerator as well. Of course, hiring of staff is incredibly important, and I know EY does a huge amount of work on that side. Access to business banking accounts is often something that we hear can be a little bit tricky, but not an insurmountable issue. And then, depending on whether your business operates in a regulated area of activity, it may also be worth exploring the sorts of licenses or regulatory tick boxes that you need to tick or that you may require. And that can vary depending on what you do, obviously. So, it could be from an e-money institution license or a payment institution license, right the way through to a full banking license if you're operating a bank. And equally, as of January 2021 of this year, if you're operating in the crypto asset space and undertaking activity, you must also register with the FCA. And that's to make sure that you're compliant with the necessary AML and CFT regimes applicable in the UK. I just round off by saying sort of the added advantages of setting up in the UK is you can then use the UK, use our country as a springboard for your global growth. You've got access to deep capital markets and liquidity, a really strong angel investment community and strong Series A, right the way through sort of into Series A to C really. And we've also seen with a number of firms that we've worked with that the kite mark of being a British-based fintech can certainly lend further credibility as you scale. So to give you an example, I work specifically with emerging markets, and we worked with an African-based fintech, and actually they looked to set up their offices, have a branch office and their international headquarters in the UK, and then use their UK branch office to scale back into Africa. And the reason for that is they found it was actually easier to come into the UK, to have the brand of being a British-based fintech, to then scale across markets and across borders, in Africa, rather than going sort of in situ from one African state to another. So it's a really useful reason to kind of set up in the UK. And again, as mentioned, we've got services here at DIT that can sort of take you through that process at a very granular level.
Brilliant. Thanks so much. And that's a really interesting case study. Thank you. Let me turn it over to you, Claire, if that's okay. And I know in your role, you spend a lot of time kind of evaluating international expansion options, but kind of picking up a cue from what Samir said there. I wonder if you could tell us a bit more about the factors you think through or involved in setting up a base, for a fintech in a country.
Absolutely, Thomas. I think, Samir's covered quite a lot of some good stuff on the more operational side of things, looking for talent, looking for a space and all that kind of thing. And that is obviously crucial, but you've also got to think about the commercial aspect of the expansion and, how do you assess if something makes sense for you commercially? And there's a kind of framework you can use where you look at 4 factors. So the first one is market size. Obviously, you've got to identify who your customers are, but also how many of them are there. And the second one, very closely tied to that, product market fit. So does what you have exactly address the needs of that market? Third one, similar to what Samir said, is around regulation. So not necessarily, obviously you do need to register for the right licenses and all that kind of thing, but also where can you use regulation as a competitive advantage to you? Does your solution help customers, either B2C customers or B2B customers, address a certain regulation? And then finally, competition. Is the market already very saturated? Are there already a lot of people doing what you want to do? I always think you want a little bit of competition because it shows that somebody else has seen opportunity there and kind of validates your idea. But if there's no competition whatsoever, there might be a reason for that. But obviously, if it's totally saturated already, then you might want to go somewhere else that's a bit more greenfield. So look at those 4 factors. Definitely have at least 3 out of those 4, ideally 4 out of 4 before you move to a new country. I think kind of thinking specifically about the UK as well, I think if you're looking at expanding into the UK, competition probably will be the biggest point there that you need to think about. There are so many fintechs in the UK addressing so many customer needs. So really think about what your differentiation point is there. I think, yeah, from a commercial perspective, that's what you need as a basis and as a framework to get you started. There's obviously, as Samir said, lots of other operational things to think about. I think I caught up with our country lead for India last week just to kind of get his thoughts as well. And he said something that he found from going from the UK to India is that a lot of the bureaucracy is very similar. So there's a real advantage there. A lot of the forms that you fill out, all that kind of stuff is very similar to what you fill out back home. So that's a real advantage you have there, and it just speeds things up a lot. And I think the only other thing that I would say is use the networks available to you. Use the Department of International Trade and their counterparts, Invest India. Use companies like EY, use accelerators, use your network, because the more and more people you speak to, the more advice you'll get, and the kind of easier and faster your journey will be.
Brilliant. That's brilliant kind of framework to think about that international expansion challenge. Thank you. Samir, you kind of touched upon briefly earlier some of the public and private initiatives, but I wonder if you could talk a bit more about those, and particularly how they're really supporting innovation in the UK market.
Yeah, absolutely. Thanks, Tom. So on the public side, perhaps what I'll do is focus on what we're doing at DIT, and then private side, I can talk about a few of the trade bodies and kind of what they're up to as well. So Department for International Trade, we've got a central fintech team here, 3 or 4 people, and I'm included within that. And we, again, work alongside our colleagues in the tech team, but we're sort of situated within the financial and professional services team at DIT. And then what we tend to do is work with our colleagues in what we call post, or our overseas network around the world. So, we've got operations in 109 markets around the world, and many of those, interestingly enough, see fintech as a priority for their market. So we've just gone through a process here at HQ where we've looked at some of our priority markets and decided to roll out or continue to work on some of the initiatives sort of on the public side that we feel are really helping fintechs. So to go into those in a bit more detail, our flagship sort of international fintech policy is something called FinTech Bridges. And a bridge represents essentially a bespoke agreement between the UK and a priority market, setting out the conditions to enable closer and stronger collaboration on fintech between governments, financial regulators, and industry. So in total, we have 5 bridges that have been signed. Those are with Singapore, China, South Korea, Hong Kong, and Australia. And essentially what those do is facilitate bilateral trade flows, increase access to capital, and reduce barriers to international growth. So again, information is available online, and we actually, towards sort of the end of last year, ran pilot programs across 2 of those markets, Australia and Singapore, where we actually worked specifically with a cohort of companies to help accelerate their expansion into new markets. And I believe about 70% of those firms have sort of since either accelerated expansion or landed in those markets. So we're certainly seeing success through the Bridges program. Second is something that I co-lead at DIT, and it's called the Tech for Growth program. This was launched sort of formally in July of 2020. And again, the focus there is to enhance the role that technology can play in expanding access to financial services and support future trading opportunities between the UK and emerging economies. The program itself is being piloted in Africa throughout the course of this financial year, where, of course, access to financial services remains low. So any global fintechs, those, for example, that have dialed into today's webinar, that are interested in using the UK as a springboard for scaling into Africa and then potentially beyond, we want to look at LATAM and Southeast Asia as well, are very welcome to join the network. And you would have seen comms, both on my personal LinkedIn, but also on DIT's LinkedIn as well for further information. And that went out this week, for example. We also launched a podcast and webinar series on Tech for Growth. So hopefully some interesting content there for you. And then finally, I'd say with an eye to the future on DIT, we're also looking at launching a package of sort of fintech specific expert advice. And that's to accelerate the expansion of, for example, a high potential UK fintech into a priority market. And again, we're just ironing out what those details are. And likewise, we're also working with sector partners to roll out a tailored support service to encourage international fintechs to establish business operations in the UK. And again, the focus there is an emphasis on attracting foreign direct investment into regional fintech clusters across the UK as well. So notionally, the operating name for this is the Export and Investment Academy, but it's not yet launched, but it's something that we're certainly working on. So certainly keep an eye out for some of the resources that we hope that particular initiative on the public side will offer. Looking to the private side, very quickly, you've got a range of different bodies in the UK that obviously operates one of our strengths. The support community here for enabling you to scale and grow your fintech is really quite expansive now and has been for the last almost the last decade, really. So Tech Nation have their fintech delivery panel. This includes leaders from across the UK fintech community. It helps to develop and operationalize industry initiatives. For example, they quite recently launched their FinTech Pledge, which helps to set globally leading standards on the establishment of partnerships between UK fintechs and banks. Obviously, it can be a huge issue when you're looking to work with a bank, navigating their procurement cycles, navigating internal red tape, and that can take a long time. So Tech Nation have tried to develop some sort of coherent, interoperable standards that banks can use to kind of reduce that time. Innovate Finance, again, is one of the UK's leading trade bodies for fintech, and they've created a number of initiatives to help drive UK fintech innovation. Those include their capital and investment program, which reports on the latest investment data into the UK. They've got something called FinTech for Schools, which they've recently launched, which looks to promote the awareness of fintech amongst young people. I think they've got an application that's live as well, which gives young people at schools a better understanding of what fintech enables, and it's been rolled out alongside the help of a number of leading UK fintechs. And they've also got the diversity program, which is sort of led, if you will, by their Women in FinTech initiative, which again profiles the leading women across all levels of operations in UK fintech. And it's an area that certainly we need to address is the diversity of representation in fintech, whether that's from Black and minority ethnic sort of leaders and communities, right the way through to female leaders and their ability to attract VC capital as well. So those are issues I know that are strong at heart at Innovate Finance. And then finally, you've also got London and Partners, very useful body to be aware of. They run a number of fintech missions, mentorship sessions, workshops through their Mayor's International Business Program. And that, for example, includes the FinTech Club, which is a new series of sort of virtual networking opportunities. And that brings together sort of entrepreneurs, investors, partners, and also industry experts to help solve some of the biggest challenges in financial services. So again, if you're looking for a looser community to network with, to bounce ideas off, that's also really useful as you start your journey, as I'm sure Claire will attest to, Onfido as well. So London and Partners do a great job of that. So yeah, those are some of the public and private initiatives that are certainly worth checking out and availing yourself of.
Brilliant, and I think there's just so much going on there. It really kind of highlights the importance, Samir, of your role and DIT's role in, in helping firms to kind of navigate all of those initiatives. Claire, I think we're super lucky to have, your such extensive experience of so many markets globally. I wonder if we could ask you to shed a bit more light on, in the kind of the ways of working, in particular, that the maturity between India FinTech, UK FinTech, or or other markets internationally that give us a helpful point of comparison. But I wonder if you could help make that contrast for us.
Absolutely. I think the first thing to think about is how readily is fintech adopted just in the community? That is your first marker. App downloads, all that kind of stuff. How are people engaging with finance through technology as consumers? That's your kind of benchmark to start with. And in the UK, it's obviously pretty mature. We've even got we've got the upstarts and the kind of proven fintechs like Revolut and Monzo and Starling and etc. But also even our high street banks are starting to innovate now. We've got kind of full digital onboarding processes with companies like Barclays, who Onfido supports, and a number of other high street banks. So that's your kind of marker. But then you've obviously got to delve into more of the business side of things, and how is this actually playing out, and how is this going from a commercial perspective. I think the big difference between India fintech and fintech in the UK is profitability. We are starting to see some profitability in the UK sector. TransferWise has been profitable for a number of years now, a few other players as well. Whereas in India, that is still catching up. I think it will catch up, but that's the kind of the commercial marker there. And I think another thing that is definitely having a big impact on maturity of the sectors is the regulators. So we've spoken, Samir's given a really good outline of some of the initiatives that the FCA has led, such as sandboxes, the GFIN, etc. But for me, it's down to the mandate of the regulator. So we're very lucky in the UK to have an FCA which has a dual mandate, both to kind of create and enforce regulation, but also to promote competition. And for me, that's the key point and the key reason that we've been able to accelerate and innovate so fast in the UK. In most other countries, India included, you have, the Reserve Bank of India, other regulators who really just have more of a narrow mandate, specifically around regulation rather than the competition element. And I think, you can start to see that in other countries as well across Europe. There's a big difference between a regulator such as ACPR in Paris, who are, starting to do more sandboxes, starting to do more stuff, and that they've got, direct kind of task laid out for them by Macron to promote innovation and promote technology. But then you go across to a country like Germany, where it's still very bureaucratic, very regulation heavy, very little incentive to promote competition and technology innovation there. So that's the kind of, I guess, the foundation of the sector. And in the UK, you can really see how having that dual mandate has fostered innovation, and I would really encourage other countries to think about that. And if they want to compete with the UK and they want to mature as fast as the UK, it's got to come from that regulation as well.
Brilliant, thank you. The Q&As are coming through thick and fast now, so we'll pick up some of those as we go. And I think particularly as we turn to you, Samir, I mentioned in my opening comments, I would really see the UK as a kind of global leader when it comes to open banking. It'd be great to hear some of your thoughts on how this sector has really evolved over the years and kind of recent trends in that space. But I also wonder, and one of the questions on the Q&A was, other fintech segments we see getting traction in the UK market. So if you could comment on that as well, that'd be fantastic.
Yeah, absolutely, Tom. And just one reflection, I think that was such a good point by Claire on not just looking at sort of regulation, but also the mandates of regulators. And, the competition mandate in the UK certainly was kind of the spark that lit the fire, I think, for kind of fintech innovation back in 2014. It's also interesting, depending on how you principally how you look at regulation. So in the UK, for example, we tend to have principles-based regulation, which doesn't explicitly determine how to achieve something. Whereas I also cover the US, and in the US, you've got a much more rules-based system, a lot more prescriptive. If it's not specifically written within the regulatory code or the legislative handbook, it's very difficult for you to be able to kind of write that in there. So I also think, yes, it's to do with the competition mandate, for example, but it's also to do with how different markets actually perceive regulation. But a really, really good point. On your specific point around open banking, Tom, I totally agree, in other sectors as well. When you look at the UK and you look at our our core strengths. Open banking very much, you may argue, even globally, is kind of a UK-led innovation. It was spearheaded in 2016 by the Competition and Markets Authority's Retail Banking Market Investigation Report, and the subsequent order which mandated the top the top 9 banks in the UK to open up their data to regulated third-party providers. So again, interestingly enough, this market innovation was in some ways mandated before by a regulatory kind of move. Subsequently, after we saw that come in, a body was set up, which I know that EY and Imran Ghulam Hussainwala was hugely involved in as a trustee of, which was the Open Banking Implementation Entity. And that was subsequently head up to help drive the implementation of open banking standards in the UK. So again, with that regulatory reform and just a quick potted history of open banking, sort of in the UK, you saw the rise of kind of 2 broad kinds of third-party providers, regulated third-party providers. One is called AISPs and the second is PISPs. I'm sure this is not new information to the listeners today. But an AISP is a business that uses a customer's account data to provide services such as sort of aggregating financial information in one place, tracking their spending, planning their finances, that sort of thing. And a PISP, slightly more innovative, is a company that sort of initiates digital payments on behalf of the user directly from their bank account, which is where you could see huge innovations. And again, offering an alternative to the use of simply a card. So again, if we fast forward to today, looking at, some of that history around open banking and what it's led to today, there are now more than 300 regulated fintech providers or third parties. OBIE has seen its 3rd sort of party, if you will, its third birthday. So it's been in the market operating for 3 years. And subsequently, we've actually seen now more than 2.5 million UK consumers use open banking enabled products. And you look specifically at API call volumes, that's increased from 66.8 million in 2018 to nearly 6 billion in 2020. So just looking at this, exponential growth in open banking, it's quite clear to see in terms of product innovation, we've seen everything now from, the issuing of business loans using open banking to boosting credit worthiness and credit scores, managing bills and growing your wealth. So, if you look at a subsector, absolutely, it's ripe for innovation. Yes, there's a huge amount of competition, but we have some of the infrastructural underpinnings, I think, which make the UK such a great place. If you are looking to tap into if you're looking to tap into banking data held by some of the largest banks in the UK. To your other point on other fintech segments, I'm sure, again, none of this is new information, but the UK is particularly strong in Regtech or regulatory technology. Obviously, we've got the likes of Onfido on the call today, but you've got others such as Comply Advantage, Quantexa. These are all companies sort of using technology, whether it be to instruct, identity verification or in helping to comply with AML, KYC and sanctions regulation. So the UK, I'd say, is globally one of the leading Regtech sort of centers of excellence around the world. And certainly, increasingly we're seeing Regtechs, appear on our missions, and in the US in particular, we actually run Regtech specific missions as well. If you look at valuations in the UK, some of the biggest firms by valuations, the likes of Revolut, Atombank, Monzo, Starling, are all in the challenger banking space. Again, that's shown sort of significant strength over the past years. And I was reading with real interest over the last week that, Starling, for example, is itself looking to engage. Interestingly, I think we're also not just seeing a trend of incumbents looking to acquire fintechs, but increasingly, I think, consolidation within the fintech space, and challenger banking is such a great example of that as well. And then finally, I'd say we have some serious firepower in the lending and P2P space, what's often called marketplace finance. So again, firms such as iWalker, Cedars, Crowdcube, Zopa, Capital on Tap, these are great firms looking to plug the gap in SME funding, which of course globally, I think the IFC, the International Finance Corporation, suggests that stands at $5.3 trillion globally. So again, some really great fintech expertise, but again, to Claire's point of view, that can be a benefit. It can show a really vibrant market, but on the other side, it can show quite a competitively dense landscape as well.
Fantastic. Now, that's really helpful. We've also had, to your point there, Samir, a few questions on the Q&A around Regtech and the outlook there, and I'd love to turn it over to you, Claire, to comment on that. Clearly, Onfido, leading player in this area. How do you see the kind of trends and the sector shaping up in Regtech?
It's a good question. I think, building on what Samir said, we've got this regulatory excellence, and I think it's no coincidence that we've got Regtech excellence kind of going hand in hand with that. So just like the kind of more generalist fintech market, I think we are leading the charge here in the UK, and I think it is relatively saturated already. There are a lot of players, but I think in Regtech specifically, there is still a lot of opportunity for more niche players. So solving very specific requirements. Anybody who works in financial services knows that regulation can get quite complex quite quickly. And there are so many firms, even with a kind of very supportive regulator like the FCA, who struggle with very kind of specific regulation related issues every day. So technology that can solve those or can help solve those, I think there's always going to be a market for. Regulation is obviously evolving as well, just as the world is evolving. Regulators need to stay ahead of, or at least keep up with trends. One of the things on Onfido we've seen this year is a huge growth. In 2020, huge growth in online fraud. Fraudsters aren't able to go into physical locations, just as we're not able to go into work in our offices, and so they're bringing their work online. And we've seen 40% year-on-year growth in online fraud. So I think there's going to be a huge amount of opportunity for solutions just like Onfido, Comply Advantage, others like that, who can address those fraud increases, address the evolution of the market in general. I think in terms of, so that's sort of where the opportunity is. Where the opportunity isn't, I would say, is probably in that challenger banking space. I think, as Samir said, there's already some consolidation happening there. Everyone is trying to be a bank today. You've even got companies like Apple coming in with Apple Pay and cash products and all that kind of stuff. You've got really innovative, exciting companies like WageStream, bringing employees the ability to stream wages directly into bank accounts, all that kind of stuff. And I think that market is quite saturated. So if I was a fintech coming from a different country to launch in the UK today, I'd probably try and focus on more of those regulatory anti-fraud type of niche problems rather than a generic consumer proposition.
Super, thank you. Samir, I guess this session kind of wouldn't be complete without talking about the pandemic. And clearly in the UK, we've also been recently impacted by the Brexit process and kind of recent developments of that in at the turn of the new year. We'd love to hear a bit about particularly how the pandemic has impacted the UK market and key considerations that firms looking to expand in the UK might think about in relation to the pandemic, but the Brexit topic is an interesting one as well. So I guess with so much going on, we'd love to hear your kind of thoughts on how that really impacts the process that firms are thinking through at the moment.
Yeah, sure. So I think generally speaking, I think uncertainty at any level really brings with it both challenges and opportunities. So certainly, looking at COVID-19 on the challenges side. We saw reports from roughly Q3 2020 of last year showing that investment in UK FinTech was roughly 40% down over the same period when compared to the year before. So I think there's certainly been at the early stage of COVID-19 challenges around fundraising. I think subsequent analysis has shown that it's actually quite a nuanced reason for that. It isn't necessarily due to a lack of liquidity. We've spoken with a number of investors now, and they've said, look, we've still got quite significant levels of dry powder to invest. But generally speaking, it's sort of that macro uncertainty. It's difficulty in fintechs, for example, being able to meet projected business metrics that they had publicly stated sort of pre-pandemic. That also therefore trickles down into the due diligence that VCs and other investors have to commit before they part with their money. Obviously, we all now live in a virtual world. I certainly have been stuck at home for what seems like an eternity. But if you're investing in firms, you've got the added problem that then trickles into your professional life, because you can't, you can't visit that firm, you can't see what they're about, you can't check out their offices, you can't check out their founding team. Everything's done virtually. And so I certainly think there was a certain degree of adaptation that investors made during the early period of the pandemic to say, can we build enough metrics? Can we find enough about a business? And can we dig enough, under the hood to be able to part with our money? And I think the answer to that is yes, because we're still seeing significant funding rounds completed during the pandemic. Just to take one example, checkout.com, one of the UK's, several fintech unicorns, recently raised, a $450 million Series C funding round that valued the company at about sort of $15 billion, making it sort of EMEA's highest venture-backed business and the world's fourth largest fintech. So that doesn't happen if the market is seeing repetitive failures across the board. So I certainly think there are challenges on the fundraising side, certainly to begin with. But having spoken to several investors now, that certainly fintechs are being reassured that there is dry powder out there. It's just a case of finding those right opportunities. So I certainly wouldn't let the pandemic sort of dishearten any fintechs that have dialed in today, and especially those that are looking to scale and fundraise and achieve growth. Again, of course, I think much like any business across the spectrum, on the challenges side, fintechs have had to draw down on their cash runway. I think Innovate Finance came out with some really interesting data at the early stages of the pandemic, saying that, I think it was something like 70% of firms were worried about their cash runway, and especially those firms that class themselves as SMEs. So I think it was something like 25 employees or less. Again, you can amplify that if you're operating in the B2C space, because of course, as consumers, we're consuming very differently than we were pre-pandemic. So if you're doing anything in the travel space, in the healthcare space, it's going to be a bit of a challenge for you. Sorry, not healthcare, the hospitality space. It's going to be a challenge for you because the non-digital versions of those industries themselves are suffering due to the very different consumption patterns that we've got. But again, perhaps as Claire might attest to on the B2B side, there is definitely still opportunities. For a company like Onfido, as Claire mentioned, as more and more financial traffic appears digitally, as organizations accelerate their digital transformation plans, paradoxically, that then provides a boost in sales for certain verticals, for example, such as digital ID verification. So it's definitely a mixed bag. I think absolutely it would be naive to say that there aren't, headwinds on the horizon, but it's also equally naive to say that there aren't opportunities that this particular period presents, especially in the B2B space.
And so Claire, how has Onfido responded to the crisis, and what were some of your kind of key learnings there?
So we have been incredibly fortunate, as referenced earlier. We raised some money right at the beginning of the pandemic in April last year, and we saw about 64% year-on-year growth in 2020 versus 2019. So it's been quite a success story for Onfido, and obviously our product is perfect for a market where everybody wants to move and do all of their financial transactions online. But we were lucky, and not every company was. I think in a more general term, we learned we have to stay agile. We did have to make some changes to the way we worked. We were already distributed across 9 global offices, so we were very used to working on Zoom and all that kind of stuff. But again, not being able to go and see clients, not being able to go to conferences, all that kind of thing was definitely an adjustment. So yeah, staying agile, reacting very quickly to market trends. And it's easy to do when you're a small fintech. It's much harder to do when you're large. But if you have the ways of working and the frameworks in place to react quickly, that's definitely a very good thing. We saw, I think, about a 25% increase in very unsophisticated fraud attacks on onboarding processes. And so we had to quickly spin up products that we hadn't thought about before. We thought, oh, this is too easy. No one's ever going to try and spoof this or come in like this. But, you know, as I said before, fraudsters were previously probably would have done kind of offline fraud, were coming online and trying their luck in a different way. So we had to be agile. We had to spin up new models that countered new types of fraud, all that kind of stuff. And again, not to bang on about it, but I think regulation needs to stay agile too and adapt. In India, the RBI put out new, in fact, the first ever regulations around how to do online KYC, which was a brilliant step. Personally, well, and as Onfido, we don't feel they went far enough. They just introduced a kind of video conference call type KYC, which has many flaws, but it was at least a step in the right direction. And it was really encouraging to see a regulator react so quickly. Very few other regulators globally were able to react quite quickly. But, you know, it wasn't fast enough. There was still about 2 months where nobody could onboard for a financial service in India, full stop, at the beginning of the pandemic. But yeah, so I think companies like Onfido that did well, and countries that did well, were ones that could move fast and had a product that worked for the digital world, which is kind of to state the obvious, but that's what we've seen.
Perfect. Well, thank you both. And we're kind of running up on time, but we'd love to finish with a kind of more general question on the outlook and you know what really you would see as the key trends kind of shaping the future of fintech in the UK. Start again with you, Samir, and then Claire, if that's okay.
Yeah, you look, I think, you know, you can read much of this online, and you know, I certainly don't have a crystal ball, and effectively with COVID-19, that certainly does complicate, you know, the situation in the UK and other markets as well, because you may see ebbs and flows in different subsectors based on you know, general consumer demand and habits. But I think, you know, broadly we're seeing, you know, the first thing I'd say is consolidation, you know, in the UK fintech space. You know, the increased prospect of mergers and acquisitions between incumbents and scale-ups, between scale-ups and startups. You know, as I mentioned, we've already heard whispers of this in the challenger banking space, which is already, as mentioned, quite saturated, quite competitive in the UK. Is certainly a trend that I think we're going to see more of. We probably haven't seen a huge amount of that. I think it's interesting to see when this fails and what the learnings might be. I think, you know, the Visa Plaid kind of sort of merger and then, you know, demerger, if you will. Really interesting, and I think you know, some of the key reasons for that was just the amount of regulatory approvals that need to take place, and how that's going to impact you know, a fast-moving business such as Plaid and likewise Visa. Is interesting to note that sort of you know, inevitably meant that those two firms decided that actually perhaps a merger wasn't in the best interests of both parties there. Again, what the future for Plaid is, you know, whether it's a SPAC, whether it's you know, an IPO or an exit, it remains to be seen. But you know, I think certainly whispers of mergers and acquisitions will soon, you know, be, you know, shouts and very audible, I think. Secondly, I think, you know, increasingly we're seeing you know, usage of the term embedded finance. You know, this is where fintech is an entry point to power the real economy. Whether that be through better access to health insurance or crop cover or financial literacy, and that actually might lead to the further democratization of access to finance as well. And it's certainly something on the emerging market side we see all the time. You know, fintech is in and of itself in an industry in the UK. It, you know, represents 11 billion to the UK exchequer. But actually in most markets around the world, especially those in, you know, emerging markets, newly industrializing economies, for example, fintech is only really a thing when it powers a use case, or when it powers another part of the economy. Certainly in East Africa, you know, you see this around mobile banking and access to wallets. Well, that actually drives real use cases about the movement of money. It's so difficult, kind of pre-M-Pesa, you know, M-Shwari and all the others, to be able to move your money from one individual to another, to remit your money across the country, that actually solves a real use case. You know, it isn't just you know, moving from cards to mobiles and improving, you know, fractionally on the user journey. It's actually solving some quite intrinsic problems that people face. And I think increasingly this term embedded finance is something that's going to be part of our lexicon moving forward. And then finally, I'd say, I think it's a real question whether current consumer trends or even trends that actually existed pre-COVID are amplified during COVID and here to remain. For example, we've seen the rise in cashless payments globally. 14% increase in non-cash payments between 2018 and 2019. That's further been accelerated through COVID. In the UK, for example, 6 million adults downloaded an online banking app for the first time during the initial lockdown. So again, I think it's really interesting to see whether those are now here to stay. Are we going to see a greater adoption of digital-only banks, cashless payments, digital wallet usage? I think that remains to be seen, but certainly, if you look at Which and you look at other consumer trends and other other bodies which kind of rank different banking applications, Challenger Bank, Starling Bank, Monzo, etc., Atom Bank often now are at the top of consumer satisfaction ratings when it comes to your banks. So I wonder if that's now we've reached that tipping point, or soon will reach that tipping point, where it's beyond a challenger bank and it's actually just a mainstay bank that's delivered digitally. Again, noting exactly what Claire said, that it's an incredibly competitive market. So you also have to couple that with the fact that you've got a number of existing users in that space already. But look, I think it leads me to just finish up with it's an incredibly exciting space. FinTech always has been, and I think maybe we're going through that evolution of what's next, and certainly perhaps the FinTech review is also something which can kind of give us a bit more firepower to the future of FinTech as well.
Brilliant. Yeah, lots to think about there. And Claire, what's your take on kind of key trends for the year ahead?
Definitely the consolidation piece, to echo Samir there, 100%. I think remote first as a way of working, but also remote first as a way of transacting. I don't think that's going to go away. People aren't going to delete those apps they downloaded. But I think with that needs to come a lot more focus from companies and regulators on privacy and security. Last year was a real tipping point in terms of consumer trust and consumer faith in online transaction. I think over half of consumers today would now choose to do all of their onboarding for new bank accounts and new loans and that kind of thing, just using a document, a selfie, and that's a real change in consumer attitude to what we saw before. So I think that's very exciting, but I think we need to be responsible about it and make sure that we're protecting this move online. And I think thirdly, there's more to come. We've got the Khalifa review. We've got other regulations and regulators across the world bringing out new changes. Even in the US as well, we're seeing a big focus on digital identity and the way that people interact with firms online. Yeah, I think just very exciting to watch out for that, and lots of change coming. And so we should all be kind of agile, ready for it, and excited.
Brilliant. Well, thank you so much, both of you, for being so generous with your time and those really thoughtful comments and views in today's session. I'd like to thank all attendees for coming along to this global market access session hosted by the Mumbai FinTech Hub. Thanks very much to the team at the Hub for setting up the session, and of course the government of Maharashtra for their continued support of the Hub. As I said at the start, the government of Maharashtra is the first state in India to create a FinTech policy to support the sector, really with this vision of converting Mumbai into a global FinTech hub. And the team at EY are delighted to be supporting on this journey. So thanks so much again for attending today. Thank you to Claire and Samir for sharing their views. I hope you found it a useful session. I certainly did. Have a brilliant day, everyone. Thank you very much.
Thank you.
Thanks very much.
Cheers, guys.
Bye.